In 1868, Japan was so poor and weak that just like other ancient civilizations like China and Egypt, it was staring down the barrel of Western colonization. Yet, where other industrialization efforts crashed and burned, Japan's 19th century industrialization remained the fastest economic miracle in history till perhaps the rise of China a century later. So how did they do it, and why was Japan the only non-European nation to industrialize so early? The standard answer is the so-called Meiji Restoration, which was started by Japanese samurai that were worried that Japan would soon be carved up like China. You see, just like British gunboats forced China to open up trade on unequal terms, in 1854 American gunboats had forced Japan to sign a couple of unequal treaties with Western powers, which forced them to cap import tariffs at just 5%. Fearing for the very future of Japan, in 1871, Okubo Tsushimi did something unthinkable for a traditional samurai. He cut off his samurai top knot, put on a Victorian three-piece suit, and together with a core group of reformers, he overthrew the reigning shogun and replaced him with Emperor Meiji. The Meiji government wanted a strong military, so in the 19th century that meant steel, warships, guns, railroads. In other words, Japan needed to industrialize fast. Enrich the country, strengthen the military. That was the job of Okubo Toshimichi. But that was easier said than done. Egypt had famously tried and failed for decades to industrialize, and even the mighty Qing dynasty's 1961 self-strengthening movement was increasingly looking like a massive failure. Yet in just 30 years' time, Okubo's home ministry had overseen the rise of a diversified industrial base that allowed Japan to defeat a major European power in open war, to end the unequal treaties, and to, rather than be colonized, to become the colonizer instead. But why did Okubo succeed where so many others failed? How did he not only modernize Japan, but create a playbook that would later form the basis for the Korean, Taiwanese and Chinese economic miracles in the 20th century? Entire academic careers have been devoted to this very question, and it's very easy indeed to either oversimplify it or to get lost in the details. Yet after months of research, I think that I've boiled down the essence of the Meiji miracle to just 5 foundational building blocks. Block number 1, the government foundation. Block number 2, the liberal free market revolution. Block number 3, the big government push. Block number 4, the monetary creation tightrope. Block number 5, the Meiji secret sauce. And as we will see, on their own, these building blocks are not enough. Only together can they explain why Japan industrialized first. Okay, building block number 1 is actually pretty uncontroversial. But how far the Meiji government went in it, even changing the Japanese language itself, honestly surprised me. It is building block number 1, the government foundation. To understand how this worked, consider the life story of a young boy, Sakichi Toyoda, born in 1867. Every night Sakichi fell asleep to the rhythmic, exhausting clack 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 of his mother laboring over a primitive wooden handloom. His father was a humble carpenter. Had he been born in old Japan or across the sea in Qing China, Sakichi's destiny would have been set and kind of boring. He would live and die a carpenter. He was expected to be illiterate, poor and quiet. Luckily, Okubo's Meiji Revolution shattered those rules. But to be clear, Okubo had a really good base to start from, since literacy rates in Japan were already higher than in the mainland before the Meiji Restoration. Yet the new government went into overdrive to push them even higher. In 1872, the Meiji government introduced a modern Western-styled national education system. Rural populations initially found these schools actually unfamiliar and alien, yet school attendance skyrocketed from an estimated 45% in 1870 to over 98% by 1901. As a consequence, national literacy surged past 90% by 1910, producing a uniquely qualified workforce foundation for Japan's upcoming industrialization. But Okubo understood that basic literacy and mastering complex technical engineering are two very different things. Therefore, with his home ministry, he created the Industrial Promotion Bureau to supercharge the imports and translation of Western technical textbooks. The scale of this linguistic operation was actually quite staggering. Recent research by economists Juhas, Shakabe and Weinstein show that in 1870, technical books were exclusively available in European languages like English, French and German. So it didn't matter if you could read, you could not read these types of books. However, by 1910, the landscape had completely transformed. Japanese language technical literacy was trailing only French and English, putting Japan on a completely different level than any other Asian nation. But their research reveals that this wasn't just a matter of running a routine translation office. The Meiji government actually had to alter the very fabric of the Japanese language to accommodate the Industrial Revolution. You see, when cutting-edge technologies were invented in Britain, it of course led to a wave of new words in the English language, like railroad, steam engine or telegraph. Translating these concepts into related languages like French or German was relatively easy. However, for Japan, there was a massive risk that translators would come up with hundreds of different translations for example, the word telegraph. And therefore, the Meiji government massively expanded earlier translation efforts using standardized technical dictionaries that triggered an absolute explosion of new words in the Japanese language after the Meiji government came to power. Now, the timing of this all could, of course, not have been more perfect for Sakichi Toyoda, who, even though he was born poor, had access to a state school where he learned to read. And thanks to this language basis, Toyoda could, of course, read technical magazines, and he famously read Samuel Smiles' British self-help book, which Toyoda credited with setting him on the path to becoming an inventor. However, reading books is only half the battle. To really supercharge knowledge catch up to the West, Okubo's home ministry subsidized Japanese students that wanted to study abroad, and they also brought knowledge to Japan, paying foreign advisors exorbitant salaries to train locals, and they organized expositions where government imported machines and then showed these to entrepreneurs. And Toyoda famously built his first patented wooden loom only after visiting the 3rd National Industry Exposition in Tokyo, a massive event organized by the Meiji government to explicitly showcase these machines to study by people like Toyoda. However, when Sakichi tried to upgrade his famous wooden looms to steel, he hit a wall. In 1905, his prototype steel looms literally shook themselves to pieces as they were utterly humiliated in endurance tests against British looms from the legendary Platt brothers. Desperate, Sakichi took a massive risk. He hired an American master machinist, Charles Francis, to help him out. But to pay his exorbitant salary, Sakichi actually had to pay a lot of that out of his own wage. But while he lived on the edge of ruin, sacrificing his own livelihood, he did in fact end up learning the secrets of precision steel engineering. But while technical knowledge allowed Toyota to become an inventor, it was Okubo's aggressive infrastructure investment push that allowed him to become a truly scalable business. Toyota could, of course, never have made metal looms without government train lines to transport them to clients across the country. And he could not have coordinated a modern supply chain without government-constructed telegraph lines. And his primary customers, the textile mills, only operated because they could import raw cotton and export finished goods through modern state-funded ports on state-subsidized ships. So while there were also many smart, ambitious young people like Sakichi in China or Korea, they simply lacked the access to advanced technical knowledge and physical infrastructure that the Meiji government handed to Toyota. Yet, if the state had just built infrastructure and education, Sakichi would actually still never have become Japan's greatest inventor. Which brings us to building block number 2, the liberal free market revolution. Building block 2 is exactly where the Meiji reforms differed radically from the Chinese Qing reforms. You see, the Qing tried to build Western industries with conservative cultural Asian values. Yet when Okubo Toshimichi traveled the world in the early 1870s to study Western industry, he realized that Japan had to import more than just machinery. To compete with the West, Japan's centuries-old rigid feudal caste system had to be completely dismantled. This social revolution had a massive immediate impact on the fortunes of ordinary citizens like Sakichi Toyoda. Under the old Tokugawa feudal structure, Sakichi, as the son of a humble carpenter, was restricted by both the rigid caste and guild systems from ever really truly scaling a disruptive manufacturing company. Therefore, abolishing the class system was the first crucial step to unlock Japan's human potential. However, simply being allowed to trade was not enough to convince people to risk their life savings on unproven technologies. Therefore, in 1885, the Meiji government passed the Patent Monopoly Act, a legal shield that Toyoda later explicitly credited as the primary spark that motivated him to become a professional inventor. Together, building blocks 1 and 2 sound like a textbook triumph of classical economic 101. The government took care of infrastructure and education, got rid of bad regulations, secured property rights, and simply stepped back then to let the free market work its magic. However, there is a massive glaring problem with this simplistic hands-off narrative, and that is Argentina. You see, at this exact same time, on the other side of the planet, Argentina was undergoing its own jaw-dropping, some would say, economic miracle. By exploiting vast tracts of cheap land and flooding the market with agricultural exports, Argentina became almost as rich as Great Britain on paper. However, despite looking like the rise of Japan at first, Japan actually industrialized, which later allowed Japan to truly join the rich world while Argentina was left behind. This puzzling divergence is what famously led the Nobel laureate economist Simon Kuznets declare that there are 4 kinds of countries in the world: developed, underdeveloped, Japan, and Argentina. So why did 19th century Japan successfully industrialized while 19th century free market loving Argentina failed at industrialization? This brings us to building block number 3, the big push. See, in development economics, the big push theory was first proposed by economist Paul Rosenstein-Rodin in 1943. And he stated that industries in poor nations suffer from a coordination problem, and that to solve it, a country must launch a massive coordinated investment push across multiple dependent industries all at once. To see this in practice, let's look at Sakichi Toyoda's steel loom factory. To build these advanced steel looms, Sakichi needed a steady supply of high-quality coal and iron. However, importing these heavy raw materials from Europe was prohibitively expensive, and therefore Japan desperately needed its own domestic mining industry. But who on earth would risk their life savings opening a coal mine when there were no modern factories to buy all of that coal? Should Toyota wait to build a factory until the mines existed, or should the mines only exist if Toyota's factories were already running? The answer is simply that without some intervention, neither of these would get built, at least not quick enough. And this is why Okubo's Home Affairs Department stepped in to play the role of the ultimate grand coordinator under a national policy called Promoting Production and Encouraging Industry. They did not just write checks, they actually built model factories like the Shinmachi spinning mill to show private entrepreneurs how modern manufacturing was supposedly done. And for heavy industry, they went even further, directly constructing state-of-the-art installations like the Nagasaki shipyard and the massive Meiki coal mine. Sakichi could only make advanced steel looms because Okubo had given the textile and mining industries that Sakichi depended on a big push. However, as state planners all over the world would discover in the 20th century under communism, coordinating an entire national economy by just the government is incredibly hard. And indeed, Okubo's state-run enterprises quickly became notorious money pits, plagued by massive operational inefficiencies. And to make matters worse, Toshimichi faced a violent backlash at home. In 1877, his former friend Saigo Takamori led the Southern Samurai in the Satsuma Rebellion, arguing that modernization was just moving far too fast in Japan. And although the government eventually crushed the rebellion, the financial cost was so massive that it forced the Meiji government to turn to the printing presses, sending the Japanese economy into a spiral of hyperinflation. And to make matters worse, while his side would prevail, the Satsuma Rebellion's fallout would prematurely end Okubo's role in the Meiji economic miracle. In 1878, while riding his carriage, he was ambushed and assassinated by conservative samurai, men who felt betrayed by his modern world. When they searched his body, they then found that he was actually carrying a letter from his old friend turned rebel rival Saigo Takamori. Okubo had sacrificed his friendships, his culture, and finally his life to build the foundations of modern Japan. Yet he died nearly broke, having poured even much of his personal funds into now failing state enterprises. So, with the country on the brink of financial collapse, the government turned to a man who could not be more different: Okubo's former disciple, Matsukata Masayoshi. Unlike his charismatic, visionary mentor, Matsukata was a numbers-driven, quiet, gentle man. Yet, as it would turn out, a quiet, calculating numbers man was precisely what Japan needed. You see, to kill hyperinflation, Matsukata presented himself as a brutal fiscal hawk. He slashed government spending, sucked cash out of circulation, and let interest rates skyrocket. Millions of poor farmers went bankrupt, and Matsukata became the most hated man in Japan. However, a closer look by historian Stephen J. Erickson actually reveals Matsukata didn't just blindly cut budgets all across the board. Instead, he targeted only the state's worst inefficiencies, and therefore Erickson called his policy expansionary austerity, not full-blown austerity. And perhaps even more importantly, Matsukata realized that while the state-led big push had succeeded in building the physical infrastructure, the government was simply terrible at running day-to-day businesses. And therefore, he engineered a brilliant pivot. Rather than liquidating these failing state-owned enterprises, Matsukata sold them off at a fire sale to wealthy, well-connected merchant families. And these families bundled the assets into highly diversified mega corporations known as zaibatsu, like Mitsubishi, Mitsui, and Sumitomo. To sweeten the deal, the government even granted these zaibatsu mega corporations private banking licenses and lucrative monopolies over state shipping routes and mines. But crucially, this did not mean that the Meiji state left industry completely to the free market. No, they remained heavily involved in high-risk infrastructure projects and heavy industries like Yawata Steelworks. And crucially, to avoid falling prey to the type of crony capitalism that ruins almost every developing country it touches, Matsukata let the zaibatsu compete amongst each other ruthlessly to ensure efficiency. Just as importantly, these lucrative monopolies on mines and transport routes were strictly conditional on performance. If a zaibatsu failed to run a mine productively, then the state would simply take it away and hand it to a competitor. Therefore, as economists Randall Mork and Masao Nakamura argue, the zaibatsu were not a parasitic oligarchy. They were simply a more efficient solution to give Japanese industries the big push that they needed to power Japan's shocking military victories in the First Sino-Japanese War in 1895 and the Russo, a European power, Japanese War in 1905, which Japan won. And by defeating a major European superpower like Russia, Japan had really proved that it could no longer be treated as a second-class nation, which ended the unequal treaties. And while he was not there to see it, Okubo's original mission, enrich the country, strengthen the military, was now officially complete. However, 1905 was not the end of the road for Sakeichi Toyoda. In fact, his ultimate success would rely directly on this unique zaibatsu system. You see, when China's Boxer Rebellion broke out, Toyoda's textile exports to China crashed to practically zero, threatening to bankrupt his young firm. And in a pure free market, his company would have surely died right then and there. However, because Toyota had the deep-pocketed Mitsui Zaibatsu backing him, well, he could tank the losses and restructure Toyota's business. And this meant that in 1929 he served the ultimate poetic justice to the British Platt brothers, whose superior machines embarrassed Toyota decades earlier. They admitted defeat. They bought the patent rights to Toyota's revolutionary Type G automatic loom for £100,000. The student had officially become the master. But Sakeichi was dying. On his deathbed in 1930, he looked at his son, Kiichiro, and he did not tell him to keep building looms. Instead, it's said that he handed him the massive British payout and gave him one final challenge. I did my part with textiles. Now you use this money to build the Japanese automobile. Ultimately, it was roughly around this time that Argentina truly stagnated as an agrarian nation and also turned to more state involvement, looking at Japan, trying to industrialize. But it became clear that Japan had provided the blueprint for the world when it comes to a state and mega corporation guided big push. So this is where our story could end. But for me it was not enough. I still had two nagging questions that standard economic theory, even with the big push building block, struggles to answer. Number one, how did a dirt poor country like Japan actually pay for all of this without drowning in foreign debt? And second, sure, Japan's government had increased education and infrastructure, but didn't established Western competitors enjoy these advantages already? How did Japanese startups like Toyota actually outcompete established Western giants who already had a decades-long head start? To answer these two nagging questions, we have to look at our next building blocks, starting with building block number 4, dual monetary manipulation. Okay, to understand how the initially poor Meiji government financed its economic miracle, we have to understand the dual nature of money creation. First, there is the type of money that the state cannot create. Foreign money, like British pounds, gold or silver at the time. This was arguably the most important type of money for an industrializing state like Japan, because it needed it to import advanced Western machinery and to hire very expensive foreign technical experts. At the time, standard economics prescribed that a developing state should borrow foreign money, of course, to industrialize. Then, when the industrialization was complete, the state could repay these loans thanks to export revenues in gold, pounds and silver. However, the fate of Egypt served as Okubo's and Matsukata's ultimate horror scenario. You see, Egypt had borrowed to the hilt to fund a state-led big push industrialization effort. However, Egypt's ability to pay back those loans depended entirely on exporting cotton. And when the American Civil War ended and cheap American cotton flooded back onto global markets, Egyptian cotton prices crashed, and Egypt could no longer service its debts. Next, Western powers used those unpaid debts as a convenient pretext to militarily invade and colonize Egypt, the exact fate the Meiji samurai were trying to prevent. So instead of borrowing, Okubo and later Matsukata tried their best to fund every single foreign import using the cash generated from domestic exports. However, this left a major puzzle. How do you jumpstart domestic export industries without foreign money from foreign borrowing for these machines and knowledge? This is where domestic money creation comes in. In a sovereign government, they can essentially print this out of thin air. This only becomes inflationary if it's not backed by a corresponding increase in real economic production. Therefore, if you print money to build a productive factory, you can theoretically increase both the supply of money and the supply of goods, keeping prices stable. However, it could take years for factories to become operational. So, to prevent inflation, Okubo turned to taxation. Under the old feudal shogunate, taxes were paid in physical rice. However, this meant that government revenue fluctuated wildly depending on the weather and crop yields, making long-term planning and investment in factories impossible. Therefore, Okubo introduced a radical 3% land tax based strictly on the monetary value of the land, to be paid exclusively in cash. Not only did this stabilize state revenue needed for the big push, by changing from rice to currency, it greatly incentivized ordinary Japanese people to turn to open bank accounts. And this allowed state-backed banks and private zaibatsu conglomerates to further increase the money supply through private bank credit creation to fund upcoming industries. But to prevent unproductive use of credit, the state and zaibatsu banks had highly targeted productive mandates. State banks lent money strictly for agricultural development, for example, while zaibatsu banks funded mines, shipping lines and heavy manufacturing. This was not yet used for stock market speculation or housing bubbles like we may see today. And because nearly every newly created yen went directly into expanding productive capacity, the supply of goods roughly kept pace with the supply of money, keeping inflation firmly in check. However, this very success did greatly threaten Japan's access to foreign money. You see, the domestic money supply grew and Japan's citizens got richer. Of course, then they wanted to buy consumer goods. But because Japan's own industries were still in their infancy, Western factories could produce goods far more efficiently and cheaply than Japanese startups. Therefore, citizens naturally wanted to use their new money to buy superior Western imports, for which they needed pounds, silver or gold. That the state and industry, of course, needed to import machines and knowledge. That's a problem. Therefore, historically, developing nations like the United States tended to protect their young infant industries from foreign competition behind giant tariff walls, decreasing imports. However, remember those unequal treaties? Without the ability to raise tariffs, there was a very real risk that Japan's advanced industries would be strangled in their cradle by cheap Western imports, regardless of how much capital the state banks and zaibatsu poured into them. So, how did Japan manage to protect its domestic industries and conserve precious silver and gold when it was legally forbidden to use tariffs? This brings us to the final crucial ingredient of the Meiji miracle, the Meiji secret sauce, which I think you could summarize as stealthily suppressing imports and secretly encouraging exports. So how did the Meiji samurai do this? Well, I think there are four main strategies that we actually still often see today. The first is export subsidies. Under Okubu, this was pretty direct, as he gave, for example, just money to Japanese shipping companies, helping exports. But also the seemingly orthodox Matsukatu started the practice of subsidizing exports, supporting banks via the newly created central bank. Even Matsukatu's fire sales of state factories to zaibatsus at absolute bottom-of-the-barrel prices, well, you could look at this and say, well, that's clearly a failure of the state. They're giving away money for free. But you could also say it was actually a masterclass in de-risking. You see, by building these factories first, the state essentially absorbed the risk 100%. So then when the zaibatsu took them over, they started on a much closer footing to Western conglomerates which had had factories for decades. Second, Japan gave rising industries a massive boost simply by only procuring Japanese companies for state projects such as railroads or navy ships. This massively predictable state demand meant that affected Japanese heavy industries essentially didn't have to worry about foreign competition for years. Third, and perhaps entirely by accident, Matsukatu premiered a staple of Asian development miracles, undervaluing your currency, when he chose to keep Japan on the silver standard when most of the Western world shifted collectively towards the gold standard. You see, because this massive global shift meant that the value of silver collapsed to gold, it also meant that the value of the yen, which remained tied to silver, automatically depreciated against the US dollar and the British pound. And as a result, Japanese products became much cheaper compared to the West, even though tariffs were low. This simultaneously helped reduce imports and boosted exports, making more international money available for importing machines and knowledge. But perhaps the darkest part of the Japanese development miracle was that while it greatly improved the life of poor, highly talented people like Sakaichi, Japanese industry was also built on a dark foundational reality: the brutal exploitation of the Japanese workforce. You see, while the West introduced labor protection laws, Japanese workers enjoyed none of these. Japanese factories routinely ran grueling 14 to 16-hour shifts and heavily exploited young female peasants, contract laborers who were housed in restrictive factory dormitories. Meanwhile, the Meiji state suppressed labor unions, outlawing strikes, and viewed organized labor as a dangerous socialist threat. Again, this benefited both exports by allowing Japanese startups to consistently undercut Western competition on price because they had to pay lower wages, and simultaneously these low wages kept imports low, allowing the Meiji government to preserve its precious gold and foreign reserves and completely avoid the Egyptian debt trap. Yet it was this very strategy that arguably caused Japan to fall into its own trap and become a fascist military dictatorship after the Great Depression plunged large parts of the already poor, export-oriented Japanese workforce into poverty. It was under these conditions that rogue elements of the Japanese army started violently targeting Japan's wealthy elites, like the Director General of the Mitsui Zaibatsu. As the public supported the violence, given their terrible circumstances, this arguably set the scene for the civilian government to completely surrender eventually to the powerful military, which later plunged Japan into World War II, which of course ultimately destroyed its industries. But that's the story for another time. For now, I hope you found this insightful, this deep dive into the story of Japanese legends like Okubo, Matsukatu, and Sakeichi Toyoda. I hope it was insightful to see how the Meiji miracle can be explained by a combination of standard free market economics, sure, but also big government and Zaibatsu-led pushes and a set of forbidden techniques, many of which you can still clearly see today in Meiji-inspired economic miracles like those of Taiwan, Korea, and China. This was my modern interpretation of this story. But what if you had lived in the late 19th century and early 20th century when this all happened? Well, in that case, you could read all about the events of the Meiji Restoration and the rise of Japan if you consistently read our advertising sponsor, The Economist. And even today, if you don't want to miss the next development miracle, I highly recommend you check out their coverage on the ascent of India's economy, Vietnam's fast but fragile rise, and finally their analysis on how East Asia should respond to the rapid rise of Chinese industry. As these analyses show, The Economist delivers insights that truly help you to see the bigger picture. And this is why I highly recommend that you subscribe to The Economist, which now offers an exclusive 35% discount for, yes, Money Macro viewers. Whether you prefer their daily journalism in the Economist app, or you are like me and really enjoy catching up on the global economy over the weekend with a nice cup of coffee and the print edition, you'll always stay on top of the latest global developments and, of course, support journalism that values factual information, integrity, and an independent point of view. So, do not miss out. Click the link in the description or top comment below, or head over to economist.com/moneymacro to claim your exclusive 35% discount today.